What's up, everybody? It's Austin. We got to talk about Snowflake's earnings. The stock dropped 14% after hours yesterday after they reported earnings. I bought more shares this morning. I said the stock was going to rebound, and I'm going to tell you exactly why and what I think Wall Street was missing about Snowflake. All right, real quick, if you watch this channel at all, you know I'm building a real money portfolio. I'm going to build it up to $1 million right here on this channel. I'm sharing every step of the way. Updated it yesterday. We're up again today, about $2,000 on the day. Portfolio value is at $49,974, so almost $50,000. We're up 4% on the day, but let's be fully transparent. In total, we have put 63,500 in, and so we're down about 13,600. It says we're at minus 50%, but if you divide 13,600 by 63,000, it's more like 20% or 22%. And here's the portfolio. I have concentrated the portfolio significantly. If you've watched this channel, as these growth stocks have sold off, I've put more and more into my highest conviction companies. That is not a recommendation for anybody to do. And as you have more concentration, you are taking on more risk. I'm comfortable with that. I'm not saying anybody else should do that. That's the way I choose to invest right now. Something like ETFs and index funds are a fantastic way for people to get started investing that are less experienced. And it's a little bit less scary if you own, just some great index funds. Let me know in the comments if you want me to cover some of my favorite index funds or ETFs, if that's something you're interested in. If you notice, I'm squeezing this thing. It's a grip strengthener because I'm trying to strengthen my grip so I can hang on to these growth stocks. Back to the video. Here's what we did this morning. Added more, like I said, I added Datadog because Datadog actually dropped on Snowflake's earnings report because people freaked out and they thought it was the end of software as we know it. And then I bought more Snowflake because I thought that 14% drop, which is what it was after hours, was just overdone. I literally thought it was gonna bounce back, even though I try not to do short-term trades or anything like that. These are based off crazy reactions, but they're for long-term positions. And so I talked about this on Twitter. If you want to follow me on Twitter, at Lieberman Austin. This was yesterday. Snowflake down 12% after hours. I still believe the stock rebounds tomorrow, pending the market not tanking. Truthfully, I intend to own shares for years, so daily moves are irrelevant but fun to speculate. And then somebody sent me a DM that was like a phishing, so I said I was feeling cute. So that's why you should follow me on Twitter for that kind of humor and comedy. But then there was some reports out that Snowflake plunges as analysts cut price targets. Question the business model on slowing growth. I love it. I love it. You're questioning the business model. Yeah, so I just shared, that I was buying shares. And I said, please keep plunging on questionable business model after 80% plus year-over-year revenue growth, improved long-term margin targets, and 174% net revenue retention rate. Net revenue retention is the percentage that their current customers spend in like the next year. So if it's 174%, that means customers last year that are overall even net, so this counts customers they may have lost too, are spending 70% more this year than they spent last year. So that's a fantastic number. I've never seen a business as large as Snowflake with net revenue retention that high. So anyways, in my opinion, not a questionable business model at all. And let me just show you how ridiculous this growth rate at this scale from Snowflake is, right? So this is quarterly revenue. So the third quarter 2022, $334 million in revenue. That grew 109% year over year. So if you go back to the third quarter 2021, it was 159. The third quarter 2022 grew 110% to 334 million. The next quarter, 383 million, growing 101% year over year. And then Q1 2023, which they just reported, 422 million, growing at 84% year over year. Let's look at some other companies. And this is just why it's so hilarious that people are saying questioning the business model. So remember this number, 422 million, growing 84% year over year. ServiceNow is a fantastic company. When they were at around 400 million to 500 million, they were growing 38% year over year, 39%, 41, 41, 33, which is still an amazing growth rate. And what I want you to focus on, and what I'm focused on, is that as they've grown revenue, even beyond that at a slower rate, but beyond that to now 1.7 billion in quarterly revenue, which if you multiply that by 4, that's like, I don't know, 6 billion in revenue a year or higher than that. They're still growing at 26% year over year. So when we own a company like Snowflake that is just pulled in 422 million in revenue, growing at 84%, that's a lot of revenue, but they are still in the early stages, and they could have years of 50%, 40%, 30% revenue growth ahead of them, making this crazy price to sales multiple of 13 right now pretty minuscule in the future. And so a couple other businesses, Salesforce is another one that has just outperformed and crushed the market over time. Even from the time that they were at 2.4 billion in quarterly revenue, they've still been able to grow 20% all the way to $7 billion in quarterly revenue. For great businesses and great markets, analysts and even management teams tend to underestimate the future potential. You can make big mistakes and own crappy companies and crappy markets and overestimate. But if you're in the right company with the right product and the right signs, like 174% net revenue retention rate, growing revenue 80% at this scale that Snowflake is, then you could be onto something that has years of revenue growth ahead. And then, scaling up in revenues to now 68 billion in quarterly revenue. This is the Google. Back in 2017, they were at $26 billion in quarterly revenue. That's over $100 billion a year in revenue. And they've still been able to grow that 20%, in the 20s, down into the teens and the beginning of COVID. And then they saw some acceleration there, 34%, 61%, 41% on $65 billion in quarterly revenue. And so for fiscal year 2022, they're estimating to have $300 billion in revenue, putting them at a price to sales ratio of 4.75. So we'll call that 5, right? Well, me owning Snowflake is based off of the potential for $10 billion in revenue, which is the guidance that the company has set, or the target that the company has set in fiscal year 29, in a price target of, or a price to sales ratio of around 10. And so people say that that's too expensive, or why do you own this company if you're targeting that far out or whatever? The reason is first of all, I'm comfortable being wrong in the short term and just continuing to buy more shares as the business is working. But if we think about the potential of not even 300 billion in annual revenue, but maybe 100 billion in annual revenue for Snowflake, is it possible? I think it's possible. I'm not saying when it's going to happen, but I think it's possible. Even at a price to sales ratio of 5, if you multiply 100 billion by 5, that's a $500 billion market cap. Snowflake, as we look at it, has a market cap of 43 billion. So that could be 10x, 12x, 15x on your money. And so that's the kind of company I want to own. And those are the reasons why I own Snowflake is none of these businesses that I just talked about were growing as fast as Snowflake at this size, at this scale, with these numbers. Does that mean that Snowflake's going to be as large as Google? No, not necessarily. Does it mean that it's possible and we could be completely undervaluing the data cloud market and the markets that they're in? We could be. And so I want to own it. Let's talk about their numbers. Product revenue was up 394 million. That grew 84% year over year, 6,322 total customers, net revenue retention of 174%. The company had, we're down here looking at their GAAP and non-GAAP results. The company had a non-GAAP product gross profit margin, which is what I pay attention to. A lot of people will criticize that, but that's fine. That's what I pay attention to, of 75%. They had adjusted free cash flow of $181 million, which was a 43% free cash flow margin, which was kind of insane. That just came because they had strong billings after last quarter. So they're not going to continue that number. But what I found very encouraging about Snowflake in this crazy, scary macroeconomic picture where companies are cutting guidance and companies are not hiring is that they reiterated that they're continuing to hire. So they see strength there. They did not lower their annual revenue guidance. And in fact, they reaffirmed their FY29, which I talked about this in yesterday's video. They reaffirmed their FY29, fiscal year 2029, $10 billion in revenue target, but they actually increased the non-GAAP operating income from 10% to 20%. So they doubled that target. And then they increased the non-GAAP adjusted free cash flow from 15%, which is what it was prior to when they updated it yesterday, to 25%. So all in all, in my opinion, this was a strong report. Even Morningstar, which is pretty conservative, is looking at Snowflake as a 5-star opportunity, which means they think it is significantly undervalued. They're saying Snowflake is at a 55% discount to fair value. They see fair value as $295 a share, but their write-up after earnings was that Snowflake piled up a nice Q1, but shares plowed through due to RPO concerns. So that's remaining performance obligations. Now's the time to buy, they say. They think it's attractively priced for the long-term investor who's looking to get high-quality exposure to the nascent and booming data lake and data warehouse space. They think growth in the data lake and warehouse software will be driven by the data sphere, whatever that means, which we expect to grow at a 28% 10-year CAGR from 2020 to 2030. So they're saying there's a lot of room for growth in this market and that Snowflake is going to benefit from that. And I agree. I want to know in the comments, do you own Snowflake or not? Do you think I'm crazy for buying more and for owning it? Let me know if you have a stock you want me to review. I'll do another subscriber review request. And then tomorrow I'm going to do a full portfolio update and go through all the companies in my portfolio. It's only 7 right now. Why they're the size they are and what I'm thinking about each one. So make sure you subscribe, like this video, and just help more people find this. If you enjoy long-term investing and you want to build wealth over time, I think this is a great time to be investing in the stock market, as crazy as it is. And just take care of your mind, your body, and your money, and be good to people.